Hi everyone, it's Matt Lockaby, the managing partner at Lockaby PLLC here in Lexington, Kentucky, and we're back today to continue our 5-part series on the M&A process. Today we're going to be talking about the investigating step. Now, in our 2 prior videos, we talked about the 2 first steps of the process, the formulating step and the locating step. Today we're talking about investigating. Let's get right in. This investigations phase, also referred to as the due diligence phase, helps buyers ensure that the proposed deal aligns with all of their objectives. This process is going to help you identify any issues that you need to resolve before the deal closes, and unfortunately, in some instances, will help a buyer decide whether or not it even wants to move forward with the acquisition. Now, under this umbrella of due diligence, there are a variety of different types. We're going to talk about the most common ones today. First is financial due diligence. And this means we're going to be taking a look at the target's financial statements, their profit and loss or income statements, balance sheets, cash flow statements. But we're also going to look at their tax returns and other tax records. We're going to be looking at profitability, cash flow, revenue streams, all those types of financial reports and records that we can get our hands on to take a look at exactly what's going on underneath the hood, so to speak. Next is legal due diligence, and this is where we're going to look at that target's HR compliance. We're going to be looking at their litigation history, whether there's any pending litigation, whether there's anything that's happened that could arise in litigation or could provide the foundation for a complaint or an investigation. We're looking at all of those things. Now, legal diligence also includes making sure the seller actually owns what the seller is purporting to sell. If this is a stock purchase, for instance, does the seller actually hold and own the stock of the corporation? If it's an LLC, do those members actually own the membership units of the entity? If it's an asset transaction, does the seller actually own the assets that are being sold? Next is operational due diligence. Now, this is a rather broad and all-encompassing topic and usually can require the most time and attention during any due diligence or investigations phase. But what you're looking at is everything that happens from the marketing and promotion of a product through payment of that product by a customer. We're going to be looking at every contract that target has with customers and clients, with vendors, with suppliers, with other business partners. What those contracts say and whether they can be assigned to an acquiring entity has a lot of implications for the deal itself or in how that deal is going to be structured. But operational diligence includes a variety of other things too. We could be looking at a supply chain issues, which is certainly top of mind right now with the uncertainty surrounding tariffs with the presidential administration. But it will also include things like IT and HR, all these other internal processes that impact or affect the way that business gets done. Next, I think, is one of the most underlooked or undervalued aspects of due diligence, and that's cultural due diligence. There's a couple of different aspects to this cultural due diligence piece, but one is evaluating the leadership teams of the target. Do you have an owner that is integral to the operation of the entity, to sales, to revenue? In other words, is the owner the company, or do you have management teams in place that allow the owner to be slightly more passive, to have a more niche role within the entity? But evaluating that talent within the company, whether it's at ownership level, management level, or if it's at the lower employee level, is absolutely vital to ensuring you know exactly what you're getting, what type of culture you're getting, what type of workflow and work streams you're getting, so that you can figure out after the acquisition closes how best to move forward and how best to integrate your 2 companies. There are a variety of other aspects of diligence, and what you end up doing, what you end up evaluating could vary from one deal to the next. What's most important to know is that as a buyer, you will have and should have access to everything you need access to in order to evaluate whether this deal is going to live up to the expectations that you think it can have, whether it's going to provide those synergies that you want it to provide. So when we look back at the formulating step, that very first step in the process, we talk about, what does this deal do? What do we need to do? What are we trying to achieve with this acquisition? This due diligence phase is going to help you measure whether this deal, whether the numbers, the operations, the people, whatever it may be, actually get you closer to achieving that goal. We'll be back next time with our fourth video in this 5-part series, the negotiating step, where we walk you through that purchase agreement and help you with negotiations on the variety of different provisions that are within those agreements. If you've liked this video, hit the like button, subscribe, and we'll see you next time.